Dan Peterson with the Peterson Partners team at Berkshire Hathaway. I'm here live with Brian Berman and
Hey, everyone.
from Mortgage Atlanta. There we are. I see us on the screen.
I'm going to turn the volume down, yeah.
We are live. And sounds like there's a little delay, but good. So Brian and I get together once a month. We just talk about what's going on in the market, and we thought we'd pull together some topics that might be of interest. We're going to talk a little bit more about what's going on in the market today. The first quarter, we're already almost 3 weeks into January, and then we're going to segue into, you know, is it good to buy together outside of being married, of course, but, you know, if you're individual, should you be buying separately, jointly, etc.?
Yeah.
And we'll go from there. So how's the first quarter going for you? What are you seeing?
It's busy. A lot of people in the market. A lot of people are waiting to the end of the year to get their applications in. A lot of applications coming in. A lot of people want to be in quickly.
Yeah.
So we're seeing a lot of movement right now. A whole lot. Probably more so we've seen probably the last 3 or 4 years.
Yeah. We're seeing the same thing. I mean, it's, you know, our buyer clients are out there looking right now, and even on our listings, all of a sudden it seemed like the floodgates just started opening up for us.
Yeah.
And, you know, one thing I've always been talking about too is, you know, last quarter, third quarter, fourth quarter of last year, buyers were just kind of sitting on the fence.
Yeah.
And it's like, you know what, they don't want to make a decision. I think, you know, in the back of their mind, the 2020 recession was going to hit and prices were going to come down. And I think people are realizing there's no recession going to probably even happen this year. Home values are still going up.
Yeah.
We're starting to see bidding situations. And it's
Lots of multiple offers.
Yep. And it's very early in the year. So it's going to be a hot year. Even a presidential election year, it's going to be a good, strong market.
Yeah, absolutely.
Yep.
So, interesting topic today.
Okay.
You know, this is something that we get asked a lot, and I'm sure you get asked a lot. What do you do? Right? If you are married or non-married, you know, do you buy together? Right? Yeah. Do you buy together? And what do you see on your side, first off? I mean, when you walk into a consultation with someone, what do you see?
So from our perspective, if, you know, it's a couple, 2 people, you know, they want to buy a property together, they're not married, you really treat the situation of, okay, they're both living there, so they're, you know, equally involved in the decision-making process. I do think that a lot of it has to do on the back end of, you know, from who's on the deed, from mortgage applications. Mm-hmm. So that has more of an impact than probably what we see on the front end when we're searching for homes.
Oh, yeah.
Yeah.
Yeah. We the very first thing we do is, if they're not married, we have to find out whether it's okay to talk to both of them and to share information. Right? Because when one person fills out an application with the other person, you know, we're talking about debt to income ratios and things on credit reports and credit scores and salaries, commissions, and bonuses. And is it okay to tell someone else who's not your spouse or that the information? You know?
That's interesting.
We first thing we have to do is, you know, find out whether it's okay.
So from our perspective, I mean, we could technically put 2 people on the contract. And so when it goes to closing, can 2 people be on 2 separate people, not related, be on a single loan?
So absolutely. So the interesting, we kind of define it, there's no legal definition difference, but we have 2 different words that we use in our office. A co-borrower is always a spouse, but a non-spouse cannot be a co-borrower. We call that a co-mortgager, right? So when we have a co-mortgager, we keep all the documentation separate.
Okay.
So borrower A and borrower B, who are not married, don't see each other's social security numbers, don't see each other's credit scores, don't see each other's debts, and that's the way the government wants it. So when we have 2 separate loan applications, 2 separate documents for that scenario. But then if you have a spouse, you can be on one loan application that's called a co-borrower. Those are just the definitions that we use. Some people call it a co-applicant, co-mortgager, co-signer, whatever you want to call it. In our office, it's co-borrower and co-mortgager. And then the dollar amounts in the transaction, like the interest rates and all that, that's all in one document. So a little bit different in how we do it. Well, that's how everyone in the mortgage industry does it. But from your side, you just have one contract.
Yeah.
And on our side, it's a privacy issue.
Interesting.
We call it NPI, non-public information.
So what happens? What are the downsides if 2 non-related people are on a single mortgage?
So there's two different parts to it. You've got ownership and obligation. So ownership means you own the house and you decide whether you want to buy and sell the house.
Yep.
Right? And so if you are an owner, you're on title, and you have to make joint decisions on that. So if you're going to sell the house, both people have to agree. If you're only one person on it, then only one person has to agree. Mm-hmm. So in order to be on the mortgage, you have to also be on the title as an owner. But to be obligated, right, is different than ownership. Obligated means you have to pay back the mortgage. So you can be on the title as an owner and not have to pay the mortgage.
If you're not on the mortgage.
Correct.
Yep.
So ownership, obligation separate. And so we have a lot of people who are one borrowers on the mortgage, but and whether it's husband or wife, and then only one or both people on the title, right? And that's a co-owner single obligation.
Yeah.
And so we see a lot of that. That's a very, very common thing that we see in Georgia. The other thing is, what do you do when you're not married, right? And that comes up a lot. And we read this statistic the other day, and NAR says that single female buyers accounted for 18% of all buyers, which was the second largest homeownership category, next to 63%, which was married couples.
And what was also interesting is that single males only accounted for 9%.
9%.
So what's going on with the men out there?
So but we see that a lot. We have a lot of single females buying houses now in Metro Atlanta, and I don't know whether it's the house unit, but also attached housing. Yeah. And it's very, very popular. I probably have a few people right now doing that right now. Single females buying, and maybe their boyfriend's tagging along.
Could be. I think they probably see why it's such a great investment for them as well.
Oh, yeah.
So I think that's great. That's awesome.
And what we do is we kind of act as a sounding board, and we like to bring up the stuff that they haven't thought about, right? So we had a client come to us a few months ago, and who's actually under contract now, and they hadn't thought about title, ownership, obligation, who's bringing the down payment, who's going to pay the mortgage, what happens if they break up,
That's a big one.
all those things. And so we really have to, bring those questions up so that they know, because we don't want to get a phone call a year from now going, oh my gosh, we're separating, and the only way to fix it is a refinance. We don't want them to spend money refinancing to fix it. We want to have a set plan in place that both people know about up front.
Yeah. And we advise our clients on those situations as well, because sometimes we may have to go back to our closing attorneys and get some guidance on, okay, here's the situation. How should this be structured from a deed standpoint, from a contract standpoint, obviously from a mortgage standpoint as well.
Is there a question?
One question. What kind of examples have you seen for co-mortgagers paying the down payment on a home?
So when you're on the mortgage, you're on the transaction. Yep. So the down payment versus no down payment, that doesn't really matter. We look at it as the fund. If you're on the mortgage, the funds are from a borrower on the transaction, someone borrowing money, an obligated person, yep. Then the source of the down payment doesn't really matter in that case. But it's really when you have one borrower on the mortgage and then someone who's not on the mortgage that wants to contribute. So let's say you've got the in this particular scenario, the single female wanting to buy and her boyfriend wants to help with the down payment. Well, the technical definition of someone who can give a gift is a blood relative or a fiance. And so we let them know if you want to go and get a ring, then we can do that. And we've done that in the past. And the underwriter will ask, prove that you're engaged. And we'll get a receipt for a ring, or we'll show that they've made a deposit at a venue to show that they're legally engaged.
So a ring is proof that you're engaged.
If you bought a ring, okay. We have proof enough. Fannie Mae will accept that. Yeah. FHA is a little bit more lenient when it comes to that. But yeah, on Fannie or Freddie, we've got to have something to show that they're actually engaged and in a committed relationship.
So if you put a ring on it, then you can also give the deposit for the down payment.
Down payment, yeah.
All right.
Yeah.
Good to know.
So, but we see that a lot. People wanting to do a gift and they're not engaged or anything. And in that particular case, it gets kind of tricky. There are, well, you know, if that's a scenario that you want to talk about, we can talk about it. But
Yeah.
it's one of those things that you have to get the money to the right place.
Okay. Very interesting. So what else we have on our list? Kind of,
You know, one other little thing
yeah.
is joint tenancy or tenants in common.
All right. That's a good question. Explain that.
So, and I'm not an attorney. I play one on television. But joint tenancy is usually reserved for husband and wives. That's the majority of what we see. And what happens is if one person passes away, the survivor gets the property. So if me and my wife are on the property together, something happens to me, she gets the house, right? It doesn't go to my heirs. Well, it goes to my heirs. She's my heir. She gets the 100% of it. Tenants in common, you can specify what percentage, from what I understand, and who it goes to. So if I want to say, if I pass away and me and my wife are on the title, it would go between my wife and my kids.
Okay. So two individuals buying who are not related, are you starting to see more like LLCs or corporations where people are creating these for protection of the what ifs?
So it's really hard to do a residential real estate transaction in the name of an LLC.
Okay.
Fannie and Freddie kind of frown upon that. But people sometimes change the title after closing, which is legally a violation of your deed. But we see it all the time, and that's probably the easiest way and kind of a creative way to deal with it. Or they just have agreements, you know. We have a client right now who's drawn up an agreement with the closing attorney, and it says what happens if one of them passes away and what happens if they want to sell and one of them disagrees. They have an agreement all put in place. It's about 6 pages. And so
it's always a good idea to get an attorney involved and figure out those details
because you don't want to be on the end of it and have to sue someone to stop them from selling a house or make a decision. You know, you don't want that. You want to have written plans in place to tell you what to do.
Yeah. And it's probably a good idea too to talk to a tax accountant too, because you know with write-offs and those type of things, who can claim it?
Yeah.
And when you go to sell, who gets the gains and any of those write-offs?
Yeah. Well, you know, especially with the market going as hot as it is right now, we haven't seen this in a while, but we're going to be close really soon, I think, and depending what price point you're in, is capital gains. I mean, every now and then we'll have a client who has to pay capital gains at closing. And so what the general rule is, if you're a single tax filer, you can exclude up to $250,000 in gains. So let's say you bought a house for $250,000 and you sold it for $500,000, you don't have to pay any capital gains, right? You just had $250 in capital in profit.
Yep.
But if you sold it for $600,000, then you'd have to pay capital gains, right? But if you're married filing jointly, that exclusion goes up to $500,000. And so it does make a difference a little bit if, you know, whether you're married and your gains on your property and whether it's a primary residence or an investment property. But we've come close in the past year of clients getting to that 250 mark in profit from their last sale.
Nice.
You know, and these are people that just bought their house in 2012, 13, you know, and they're way up there.
Wow.
So
tells you what's going on in the market, and we're still expecting it to grow.
yeah, definitely.
So, all right. Any other questions? I've got another question here. What are the benefits of getting pre-qualified before house hunting? That's a good question.
So from a real estate perspective, what
From a
do you
real estate perspective.
So from Dan, listing agent king.
It when we get into a bidding situation, it just makes the offer that much stronger with a seller. And even if you're not in a bidding situation, it's still a great thing to have because sellers are always wanting, you know, can this buyer afford my home?
Do you, as a listing agent, show your seller the letter?
Absolutely.
And do you explain to them the verbiage in the letter? So do you say, this is from XYZ Mortgage Company, they're difficult to deal with? Or do you say, this is from XYZ Mortgage Company, they're easy to deal with? Selfishly asking. And do you say, you know, this is a pre-qualification letter versus a pre-approval letter versus a TrueQual letter?
Yes. So we talk about the different types of letters, and especially if we're evaluating different offers, multiple offers, financing is the big piece of it because you got to make sure that gets to the closing table.
Right.
So pre-qualification letters, they don't really have a whole lot of weight. When you get true qualified and you're approved, it's almost like a cash buyer. So if you're sitting next to an offer with a cash buyer, it could be a very similar, offer situation.
Yeah.
The lenders, absolutely. I always like to call the lender and have a conversation with the buyer's lender and find out a little bit about them and how strong the buyer is.
Absolutely.
But also, one signal that I get sometimes is you try to get a hold of the lender, they never call you back. That's what we're going to expect through that whole transaction, and
and you relay that to your seller.
And I relay that to my seller as well.
Yeah. It's interesting. I've had agents reach out to me and say, can you give me a blanket pre-qual letter or pre-approval letter that I can use on any house? And I say, I can, but I strongly discourage you from doing that, because you're going to give my blanket letter that says John Smith is pre-approved for $300,000 to Susie Smith, the real estate agent, and Susie Smith is going to call me and ask me questions. And I'm not going to know who she is, I'm not going to know her property, and I'm not going to be prepared for her phone call. Right? So that's why we like to do property-specific ones. So I go, okay, I just wrote a letter for your client.
Yep.
I'm going to expect that listing agent to call me.
Yep.
And I'm going to be ready for that phone call. So when I see a phone call Saturday at 7 o'clock coming through when we just wrote a pre-qual letter or pre-approval letter an hour before, I'm going to answer it on Saturday evening.
Yeah. And just to clarify too, when we call lenders and talk to you guys, it's not getting detailed personal information or anything like that. It's just getting a feel. It's more about getting a feel for, can you get this loan done, and are you going to be good to work with?
Yeah.
So
we get asked all types of questions, and can they go higher? And I always say, we're not the negotiation people. The other real estate is the negotiation people, but I'll tell you that the borrower is qualified. They've given us our documents, and we're going to have a really good experience with your transaction.
Yeah, that's what we want to hear.
Yeah,
absolutely.
So, and then on our side, we get the 3 steps: pre-qualification, pre-approval, and true qual, and that's what we like to take our clients through.
Yeah. And how long does that take to go through to get to the true qual?
So pre-qualification, pre-approval, that could happen the same day. We wrote a pre-approval letter for someone yesterday who filled out an application yesterday morning.
Okay.
That easy. He filled out an application, and they had digital assets, digital banks, digital pay stubs. Clicked one button, wrote a pre-approval letter. So they didn't have to send me a single document, and super, super easy.
Okay.
True qual, it's going to take probably 3 or 4 days from start to finish, depending on how complicated your scenario is.
Okay, that's still not a long time.
No, not a long time when you're making an offer and there's multiple offers, and it's going to help get you to that next level.
And just to clarify too, how it can help us in multiple offers is that typically there's a 21-day plus financing contingency and appraisal contingency, and probably like a 10-day due diligence. Cash offers that come in can waive the appraisal and the financing contingency. So really the risk is that 10-day due diligence.
Yeah.
But with a true qual, what you're allowing the buyers to do is basically also waive the financing contingency and the appraisal contingency.
Yep.
Because they're already qualified from the financing standpoint, and you can actually get the appraisal done during that 10-day due diligence.
Yeah.
So you're taking care of the appraisal much quicker as well.
Yeah.
So
big advantage. Huge advantage.
It is huge advantage.
Yeah.
Awesome.
Well, great, guys.
Well, good.
Feel free to reach out, comment below, send us a message, and like and share the video.
Yeah. Call us if you're looking to buy or sell and need a mortgage. Give Brian a call.